Hello, this is Matt McCall. Thanks for joining me here today. I'm doing a little special chart show. This is all about the election and basically looking at charts that really define what happened in this election and really help us define where the market goes from here. Within the market, certain sectors, other asset classes such as bonds as well. So I got about 15 or so charts I'm going to fire through pretty quickly in the next 10, 15 minutes. And kind of give you an idea of where we stand. I've already put my thoughts together longer term on paper via an email that was sent out. But now I want to take a look at just the charts, purely the charts, and let you see what story they're telling. So let's start here with the S&P 500. As we know, Trump won last night, the election, and it was pretty handily. Actually, even though he lost the popular vote, he got the Electoral College pretty well. As a lot of people up in arms, a lot of people celebrating. At one point last night, when he was kind of a foreseen conclusion he was going to win, the Dow futures were down nearly almost 900 points, about 855 points at one point at the bottom. And we ended up closing up today. Take a look at the Dow here real quick, and I'll come back to this. Closing up 256 points. So over about 1,100 points or so difference between last night and where we closed at today. Extremely amazing move. And just to give you an idea of where we stand here with the Dow, if we take a zoom out here, we can see this is an all-time high right here, 18,636. So we are 47 points away from an all-time closing high. That is kind of mind-boggling when you think about it, because I would have said if Trump wins, yes, we'd have a deep sell-off for a couple of days, similar to the Brexit, like we had right here. You can see the Brexit sold off and came back. That's what I was picturing, and we had a little bit of weakness this morning, but we've been strong all day. So let's go back to the S&P 500, a little bit better chart to look at. We've bounced off the 200-day moving average. We broke it one day back during the Brexit, came right back, came right down on it before we rallied on Monday, and we've been up ever since. The Dow is up 700 points in the last three sessions. As we can see here, if we take a look at the S&P 500, what it has done over the last three sessions, it's pretty amazing as well. It's up 3.74% in the last three sessions. And again, if we take a look at where it is from the high, we're down about 1% from an all-time closing high. So we are right there within striking distance. Again, it's amazing to believe that this is all happening after there was such a surprise, probably the biggest surprise in a presidential election ever, definitely in modern history. So the charts tell us right now, obviously, that they're okay with Trump being the next president. It's going to be extremely volatile, in my opinion, going forward. And let's take a look real quick at the VIX, which measures the volatility. And the volatility, as it goes up, it shows more panic, more volatility in the market. It spiked to a multi-month high last Friday. We've been drifting lower, but down today over 23%, right back down into this range. So I don't want to say complacency is back, but the volatility is definitely gone a bit. Keep that in mind. But it doesn't mean that the volatility is completely gone, that we can't have big up days and big down days. I still think they will be out there. So that's where we stand with the stock market right now. Everything looks good. Could we pull back to this 21.19 range, which is about 2.5%? Absolutely. I think we can gyrate all around here for the next couple of weeks. We have the Fed meeting coming up a month from now. A lot can happen. I'm not saying we go straight up, but what I am saying right now is that things look pretty good as far as the chart is concerned. Now let's take a look at something else that was really moving here today, and this is the yield on the 10-year. So again, you would think with Trump becoming president that the 10-year actually, the yield would probably go down as people are buying bonds. They'd be nervous and going into government bonds, which are safety. The contrary actually happened, up 11% to 2.07% on the 10-year, U.S. 10-year. It's the highest level going all the way back to January. If we zoom out a little bit, we could see back in January, we had the high right around 2.3, 2.25 or so. We could make a run to that. We broke through some really significant resistance here today. So this is pretty big move that we're seeing here on the 10-year. And we'll talk a little more about bonds in a minute, but I want to jump into sectors here really quick and take a look at which sectors were moving here today. So of course, one of the big sectors moving today were the healthcare stocks because as we know, Hillary Clinton was about to go after pricing for a lot of these drug companies. So one of the big movers today was the biotech index. As you can see here, up 8.9%. Big move. Look at the volume. I mean, the amount of money coming into this was absolutely amazing here today. It created a five-time bottom over this year. And that was, boy, a nice move. RSI crossover. So this could pull back, maybe fill this gap, but it looks like the biotechs, that huge cloud that's hanging over biotechs is gone. And this, if you look at valuation-wise, biotechs are extremely undervalued, which is why they rose 9% today. Again, we could easily pull back a bit and fill this gap, but I'd be looking to buy biotechs on weakness for sure. Another sector moving big today, which I thought it would, but I didn't think it moved this much, is the financials, up 4.25%. This is the XLF. If we zoom out here, you can see this is the best level since 2008 for the financials. So this has had a really big move. The reason behind this is you're not going to see Trump go after Wall Street like Clinton claimed she was going to, even though I didn't think she was going to, but she claims she was. Obviously, we're going to have interest rates moving higher at some point here in the near future. That's going to be good for financials as well. And just any type of uncertainty overhanging the market has helped the financials. And let's look at one stock in particular that we have here at Penn Financial. It's JP Morgan Chase, JPM. Let me ask you this. If you think that we're going into recession, as many people say, and a lot of these quote-unquote experts, I've used that term extremely loosely, calling for major recession, stock market crash. Yeah, well, maybe they have their screen upside down because they're looking at the wrong market they're looking at. Would you think that JP Morgan would be hitting, yes, that's right, an all-time high if we were on the verge of recession? No. Just not how it happens. It's just not how it happens, folks. You can believe what you want, you can listen to who you want, and we're all entitled to our opinions, but the charts speak to what's going on, and this is showing you what's going on. Real quickly, as we're in the financials, this is the regional bank ETF, KRE, up 5.6% today. Again, less regulation and also interest rates going up. And we saw the 10 years I mentioned cruising to today. That going up helps this sector very, very much. It increases the lending margins for some of these regional banks. Gold was up big last night and then up big today, this morning, because obviously Trump winning looked as people were going to the safety trade. Ended up actually a GLD closing down a few pennies today and now is really in this zone. If we take a look here, really between the 200-day moving average and 50-day moving average has been hugging it. So it's going to break out here eventually at some point. Whichever way it goes, it makes a run. I'm not trying to predict it. We'll go with it, and we're not playing it now, but we'll see where it goes from there. But the GDX, which is the gold miners ETF, still held on to their gains of 2.6%. Again, hugging this. This may be an indication that it's going to break out because the gold miners are holding up a little bit better. But we'll keep an eye on that right now. Still a nice safety play because if there is any volatility, any type of stock market sell-off in the near future, the gold stocks should do well in the gold miners. Another sector doing well, another Trump winner, was the aerospace defense. He's talked about spending a ton of money on aerospace defense, expanding our army, making the greatest in the world once again. If it's not, I don't know how you really base that. But you can see that was up 4.3% today. This is the aerospace defense ETF. Zooming out, new all-time high. Some of the stocks in there, Northrop, NOC, up 5% today. Raytheon, RTN, up 7.5% today. Boeing, up 2% today. Lockheed Martin, up 6% today. So big movers all around in that sector, which will do well under a Trump presidency. Another area is coal. Obviously Hillary Clinton was going after coal, even though she was. Look at a chart of the coal ETF. From the low down here in January to where we are right now, up 170%, give or take. It's a huge move for the coal stocks. I'm going to zoom out and show you we're nowhere near where we were. I mean, up at high 60 back in 2008, we're at 13, and that's after a 170% rally. We were down in single digits below $6 at one point just earlier this year. Will the coal stocks continue this torrid rally? I don't know, not to this pace, definitely not to this pace. Would I buy and pull back close to the 50-day moving average around 12, 13? Yeah, I may give it a shot there. I wouldn't chase here, but they're moving for a reason because it took that Hillary Clinton potential to bash them off the table. Another one is doing well is the steel stocks. SLX is the steel ETF. Trump talks about infrastructure, talks about expanding, spending a lot of money on that. That obviously will need a lot of steel, a lot of materials. So you're seeing SLX have a very, very nice day. X is U.S. Steel Corp, up 17% today. Big, big move. Some of the material stocks had big moves as well. Building materials, Martin Marietta Materials, MLM, up 12%. As you can zoom out here, new all-time high, as you can see. Vulcan Materials, which does a lot as far as roads and that type of stuff. Gravel, which was going to be needed, obviously, for this country to upgrade our infrastructure system, up 10% today. Again, new all-time high. So you're seeing some nice moves in some of these stocks. Now let's kind of shift a little bit over to some sectors that did not do as well. I mean, I hate to be negative, but we need to talk about everything. One more area that we talked about is good. These are the privately owned prisons. The Corrections Corp of America up 43%, and then the GEO group, GEO up 21%. I wouldn't touch either one because I don't know where this sector is going to go, but just want to show you that they were also up big today. Well, let's take a look at some that did not do as well. The solar stocks, obviously, Trump's more pro fossil fuels, at least that's how it comes across. So the solar ETF got hit today, down 5.6%. Tesla is in kind of that area, down 2.5% today. Didn't get hit too much, but was down when a lot of market was up. FAN, which is the wind energy ETF, down 3% today. Still above the 200-day moving average, but down on that news, as you can see. Then there was some of the gun stocks. RGR, which is the Sturm Ruger gun stocks, down 14%. And then Smith & Wesson as well, down today as well. That was down, how much we have? Almost 15.5% today to a new multi-month low. Typically, like when Obama got elected, both times they went up thinking that they're going to have more gun control. So people run out and buy guns, buy ammo. Trump's not going to put that big control on it. More fan of an NRA. So we will see not a big rush to buy gun stocks, which is why you see the gun stocks fall. Then there is Obamacare. Will he repeal it? Potentially. He's got the House, both houses, so you probably can repeal it. So we'll see what happens there. But some of the stocks that were beneficiaries of Obamacare got hit today. Molina Health down 16%. LifePoint Health down 13.5%. WellCare Group, another healthcare plan, down 8.5%. Cigna then on the other side, up 5.5%. So there will be some winners in healthcare plans. There will be some losers. I don't know exactly which ones are going to come out of this, so I'm not even attempting to try to play that right now. But I just wanted to point out that there was definitely some stocks there moving. Let's talk international here for a moment. Everybody thinks that Trump is best friends with Putin and Russia. Maybe he is, maybe he's not. I don't know. But the Russian stocks were up today, up 2.5% as the RSX, having a nice day. On the flip side, of course, that country on the other side of the border, potentially on the other side of the wall, if Trump has what he wants, Mexico. The Mexican ETF closed down 8.5%. The Mexican peso also took a big hit today. As you can see here, down about 4% was the Mexican peso after a huge rally. Just the other day, look at this big rally that we had here on Tuesday, thinking Clinton was going to win, and then obviously pulling back a bit, but didn't get back all those gains. But the peso here was down. But in the emerging markets themselves were down because the talk of coming from Trump of anti-trade. So this is the emerging markets ETF, the big large one, down a little over 3%, 3.25%. The Chinese ETF, the 25 large Chinese stocks, down 2.4% today. So potential of trade breaking down with some of the emerging markets has hurt. Also hurting the emerging markets were a big increase in a 10-year yield that hurts them. The rise in the U.S. dollar as well hurt them as well. And again, let's go back to this yield real quick because just showing it was up 11.25% today, up to 2.07% on a 10-year. So what happens when that goes up? Well, people that are sitting in a TLT, which is the long bond ETF, so invest in government bonds, long bonds, down 4.25% today. And since it topped out not too long ago, a couple months ago, it is down 13.5%. People think, well, you go to bonds, stocks are too aggressive. I've been saying forever, you need to stay away from bond ETFs. You could buy individual corporate bonds, in my opinion, because you get back par as long as they don't go bankrupt, which we have some of those for our clients. But when it comes to this, stay away. We've stayed away, and you can see what happened today to the bond ETFs. Really, really, really ugly move here in the bond ETFs. But I will show you the junk bond ETF, the corporate junk bond ETF, only down 0.2%. So it's actually held up well because it's more tied to stocks. So if you're looking for yield, there is some yield out there, but you want to stay away from the government bonds for sure. It looks like that bond bubble has really burst and really could go a little bit more. So again, just kind of wrapping up here what's going on. Obviously, we had a very surprising victory. We had the Brexit, which was a huge surprise back here. Market got crushed. Trump victory, huge surprise, but we actually went up. This market's going to be volatile, but I really believe longer term we have a great opportunity. If we have earnings come in next year for the S&P 500 between 133 and 134 a share, which I think is very doable, you put it at 18 times earnings, which is in the top end, but we usually get to the top end in a good market, puts us above 2,400 in the S&P. Let me zoom out here. 2,400's up here, just to give you an idea of where we need to move to get up there. That's a big move to get up there. You're looking at a good 11, 12%. That'd be 11 or 12% gain next year. That'd be fantastic. I'd be great with that. So there is big upside potential still here in the market. Expect volatility. I don't want to beat this, but I'm going to beat it into you. We're going to expect volatility, but we're going to embrace it. We'll sell some stocks into the rallies, and at the same time, we will use some of the pullbacks to establish new positions in some of the sectors we talked about here that could do well under a Trump presidency. But again, I hope this did not come across political at all. I'm not putting politics in here at all. My politics are all aside. My only goal here is to help you decipher the markets and help you make money. And I hope this kind of deciphered what was going on here today for you. If you have any questions, please shoot us an email at info@pennfinancialgroup.com, info@penn, P-E-N-N, financialgroup.com. Any questions, comments, complaints, whatever you want to do. Complaints would just be deleted, but if you have anything constructive, please send it off. We'd love to help you out and get you moving here in the market. Again, I'm Matt McCall, President Penn Financial Group, editor of many newsletters out there right now, from Future Stocks, co-editor of Breakout Stocks, co-editor of ETF Trend Trader, and have a new company launching soon that's very exciting in the crowdfunding business. But again, this is an exciting time right now. There's a lot of opportunity to make money. I hope you're on page with us, and we'd love to help you along the way. I hope you have a wonderful evening. Again, Matt McCall, thank you very much for joining me.